tell me, index fund sounds amazing. When are some of the times they haven't really performed that well?
Yeah, good question. I mean, in general, an ETF it operates the exact same way as a managed fund. So you see in something like the GFC, when the market sold off, you're investing in the market, so therefore the performance was poor.
Okay.
Now that's not really to be any surprise or be surprised about, given the market performance was poor.
Mm-hmm.
Active management failed, or I shouldn't say failed. I mean the market sold off, and therefore stocks sold off, and people lost money. So ETFs essentially, for the most part, reflect the performance of the wider market in general, and there should be no concerns with respect to investing otherwise. I mean the ETF is essentially a reproduction of the market and the way it moves up and down, and that's essentially how they function.
Okay, so let's look at 2008, 2009. The market might have dropped approximately 40%, and you'd expect that if you're in the S&P, if you're in the ASX 200, that your index fund investment would fall by the 40% as well.
Spot on.
Okay, so it's just sort of tracks market returns. When you look at the papers or you read the papers and you see that the index or the S&P, the ASX 200 or 300 has dropped by 20 points or 30 points, expect your index fund or ETF into that specific asset class to go with it.